If you missed the trades we shared last week, I beg you, do not miss these ones. My joy is when people come to my DM and they are telling me how much they have made using the signals that I share on the channel every day. The trade ideas that I share here are premium ideas. Some of the trades that I give, they keep playing in profit for more than 3 weeks in a row. Okay, some give you up to 500 pip, and we even have signals that are going to as far as 1,000 pip. And the question is, why are you not taking these trades? Even if you're a beginner trader, you can trade with 0.01 lot size, or you can follow them on demo and see what is going on. So today I am going to share with you the best trade setup for this new week. And one good thing about the ideas that I share, they are swing positions. Some of them will take about 3 days before they reach the entry point. And when the trade executes, it will keep running for weeks. Some of the signals will run for the remaining part of this year. So I wouldn't want you to miss the opportunity. If you are not in the WhatsApp channel, check the description of this video. You will see a link to join. Whenever I am executing any of the trade, I used to share it there so that some of you can follow me. And I am going to be doing this free to the end of the year 2025. Next year, it won't be the same. Okay, next year, it's going to be paid for these signals. But for the rest of the year, you can follow along and enjoy the signals. I begin my analysis by looking at the Wells Macro Terminal. This is a premium software that scans the entire forex market, does deep fundamental analysis, macroeconomics, and recommends swing positions for us. So when we use the terminal, we have been having back-to-back winning. Forex trading strategy is supposed to be stable in a way that you can do this thing for life. In the industry currently, I have not seen any retail institution that have this terminal that we have. So I'm going to show you some of the signals. The first area, you have currency strength trend. This is just something that shows us what is happening in the market right now. So it doesn't really give us the idea. It tells us whether we should execute or we should wait. The area of concern is this place where you see currency strength, and based on the currency strength, the US dollar is still the strongest currency. For nearly 1 month now, the USD has remained number 1, followed by the Australian dollar and British pound. Now the lower three, you see Japanese yen, New Zealand dollar, and Swiss franc. These have remained where they are, and the recommended trades have not changed. These recommended trades keep on going in profit. For months, they keep on going in profit. We have been waiting for retracement, and we add to the position, and we take old profit, we add to the position. That is how we have been doing. And I am going to show you where you will enter the trade, where you will exit the trade. So let's begin the analysis by looking at the dollar index. This is what I told you, and remember, this is monthly time frame. The dollar index has been trending for a long time. From 2007 to date, it has been in an uptrend. And this trend hit the trend line here, went up, and came back to that trend line. And it broke as the 61.8 Fibonacci level. So I expect this push to keep going for a long time. So throughout the remaining part of 2025 and 2026, I'm expecting a bull run on the dollar. Now, the macroeconomic is showing dollar as the strongest. And here we're looking at the technicals on the monthly time frame. The dollar is also well positioned. Okay, so this movement has just begun. If you go to the weekly time frame, let's see what is going on the weekly time frame. We have seen a clear movement. The movement has begun, a pullback, and a continuation is there going on. If you come to the daily time frame, where I like to end the analysis, you can see clearly what is going on, bro. You see, it pushed up, came down, up to that level, came. And this movement is contending there, something like a double top. So something like this is battling. So what we can wait for on the daily time frame, let's wait to see a push above that level a little bit. Then it might retrace, and then you see that journey. It is going to be a smooth trading time for the US dollar. If you do not have a live funded account, try and fund your account, because we are about to make money. So the dollar index is bullish, clearly, very bullish. So in the new week, expect that to happen. Whatever, if the dollar, you see the dollar going down, it is just that correction that is happening. Then after that correction, we will be loading our accounts, okay, and executing those trades. So that is the dollar index. So let's look at the first trade on the terminal, which is USD-JPY. You can see USD-JPY has been bullish for long. I remember giving you this trade from around this point. Yes, I remember clearly. We started this trade from here and we have been trading it to that level. That is the daily time frame. Let's go to the weekly time frame and see something. On the weekly time frame, you can see that the US dollar has come to a level where it is beginning to retrace a little. So what we're expecting is for it to, if it can close above that level, then this will be the next target. But if you come to the daily time frame, let's see what's going on there. Because the dollar will be retracing, okay? So if the dollar retraces, this is what you will see. From here to this level, this market can actually drop to about this area before the next push. So let's wait for that to happen, okay? I'll be watching what to do. If that happens, it's going to be a great time. So let me see this. This is daily time frame. So for USD-JPY, I will place a pending order around this level. This is where I will wait for the USD-JPY for my next entry. So you have seen it. The number that I'll be looking at is 154.634. That is the entry point for USD-JPY. If you go to the terminal, select USD-JPY as our first trade, we will be setting a buy limit and the entry point is 154.692. Now we are risking 2% of the account. If you calculate on $1,000 account, you should be taking 0.02 lot size for $1,000 account. You can make it 0.03. Stop loss is 153.89. You can see the entry point, take profit 1, take profit 2, and take profit 3. That is trade number 1. USD-JPY is a buy. The next trade is Australian dollar Japanese yen, AUD-JPY. Now this trade is a little bit trickish. If you look at the weekly time frame, it is contending at a solid resistance zone. Okay, it actually traded above that level and is back. If you come to the daily time frame, you will see something like this. It traded above that place, closed with a full body candle. And this is what I have observed. I actually executed this trade, but I will tell you what I am reconsidering. So that for those of you that already have this trade running, this is how you will manage it. If you come to the 4-hour time frame, I actually traded this based on the 4-hour time frame because it's clearly a buy. So what I did was I took Fibonacci retracement from this level and then we executed it at the 61.8 Fibonacci level. The stop loss is below this point. It's a very good trade. Now another thing I've come to observe later after I executed the trade is this. On the daily time frame, I saw this clear. Now, so from here to that level, you can expect this trade to drop to this area, which is the 61.8. So this where we have placed our stop loss. The trade can actually come to that stop loss area. So for me to manage the trade I already have running, I'm going to add another trade when it comes to the 61.8 Fibonacci level and move the stop loss of the previous trade to the next stop loss zone. Okay, so for you that have not entered the trade, what you should do is place your trade pending order at 100.170. For AUD-JPY, entry point is at 100.170. A lot size is 0.02. Stop loss 99.27. TP1, TP2, and TP3. They are there. You can enter 2 positions or 1, depending on your account size. If your account is below, it's within $100, use 0.01 only. It is going to give you enough money. These are swing positions, okay? So don't over leverage your account. So that is trade number 2. So this is the pound against Japanese yen. This is a beautiful trade setup. If you go to the monthly time frame, let's see what is going on. The trade is trading above this level. The last time it came there, it could not close with a full body. But this month, it's struggling with a full body. But this month, it's actually struggling there, although it has not yet closed the monthly. So if you check the weekly candle, let's see. It happened like this last time and it dropped. But right here, what I'm seeing, the structure that I'm seeing, the formation, is that this breakout is going to be sustained. Because here, there was no price action after it came to this level. So it has hit here before, dropped, and this is a push. So I'm expecting this price action to be sustained clearly, and that will remain above that level. So if that happens, you should expect the next movement of the pound against Japanese yen is this level. And if you calculate from where we have the market now to that level, it is more than 1,000 pips, 1,100 pips. So this is a trade you should not miss. Prepare yourself, prepare your account, have self-discipline, enter the trade and wait, and you will make money on this trade. Okay, so this is what we are going to do. If you come to the daily time frame where I do my execution of the trade, this is the next trade setup. Take your Fibonacci level from this level up to here. So what I am expecting is for this trade to fall to around here. Give me signs of reversal, and then we'll execute the trade. And if I do that, I'm going to be catching up to 1,000 pip on GBP JPY alone. So the entry point for this trade is around 202.092. So you have 202.092, which is the entry point. So you set a buy limit there. You can use 0.02 for a $1,000 trading account. Stop loss is 200.69. TP1, TP2, and TP3 are on the screen, so you can look for it and execute the trade. There are many trades we have coming up, but I do not want this video to be too long. If you follow this trade with discipline, you will make a lot of money, okay? And I want you to follow it with discipline. This is swing position. A lot of you cannot be patient. You want to take a trade and close it in 1 week, 1 minute, 1 second. You are in, before the week runs out, you have taken 100 trades and blown your account. It is not a good way of trading. I want you to be disciplined. The West Macro Terminal accuracy is high, more than 90% accuracy in predicting the direction of the market. So when it gives you, the next thing you need is to be able to wait for the right place to execute the trade. And the number 3 thing you need to do is to set the stop loss based on volatility. So this calculator that we have here is not just giving you 5 pips stop loss or 3 pips stop loss. It is giving you stop loss based on average true range. And that has proven to be one of the best ways of trading. If you have any question to ask, check the description of this video. And I am going to give you a very great opportunity right now to join the Wells Forex Academy and learn how to trade. If you join the Wells Forex Academy, I am going to give you access to use the terminal for a period of 4 months. Normally, the terminal subscription is $50 per month, but I'm going to give you 4 months free access, plus the Wells Forex Academy, which is $120 US. So, but what you are going to do is pay $100 US to gain access to the Wells Forex Academy and to use the terminal for the period of 4 months, and this will solidify your trading, and you will come out profitable on the other side. You can check the previous videos and you will see how well we have been performing. Almost all the signals that I've been sharing, they have all performed very well, and you should not be left out.